Here I am. Peace and blessings, family. This is Master B from the Trading Lounge. Welcome to this session of breaking down the Fibonacci. Now, the Fibonacci is a tool in our toolbox that we could use to measure, the strength of the pullback, retracement, correction. So when a market does this, when it does an impulse, and we have a pullback candle, red, green, red, both, it's pulling back from the original impulse. This key right here. We want to know the strength of that pullback. Guys, I'm feeling real good tonight. I'm seeing that mastering this Fibonacci tool, that we can project in the future possibilities of where price action is going to go based on that correction. So we take a chart from looking like that, looking like this, to actual structure in the market. So these two areas right here, the 50% and the 61%, that area is known in the community as the golden ratio zone. So basically what that means, I'm going to give you my interpretation. I'm sure there's some technical terms out there, but you know I like to keep it very simple. So basically what that says is, for me, if price action starts from, you get a starting point from the 0 or the 100 line, and she extends up, and does a pullback into this golden ratio zone, and that golden ratio zone holds, meaning that no candles break below that or close, have their open and close below this golden ratio zone, we can look for a potential target of negative 27.2, which is also known as TP1. Now, if the strength of this trend is strong, possibilities you might have a runner to TP2. But I'm looking for the guaranteed low-hanging fruit from the golden ratio zone to TP1, which will give me more than enough points for the day to shut my trade down. So I wanted to do a quick explanation of how I utilize the Fibonacci. Now, you can find out what all of these numbers mean and these different levels inside the Fibonacci by going to the internet library, Google. So the most areas that we are concerned with is that pullback or that retracement or the market pulling back and making a correction. How strong is that correction? If it's 61 and less, we are looking for TP1 of the negative 27.2. So now that I got that explanation out of the way, we're going to go to what happened on Friday. Now, mind you, this is all being done on a 5-minute chart. So you can go up to your higher time frame and find your levels of support and resistance, but I am a day trader, so I am concerned, where is those bars right now? All right. So my trading time is 9:30 to 12 noon. Within that time frame, I am looking for my setup to occur. All right. So just a quick interject. These wicks represent a pullback. So a pullback doesn't necessarily have to be a full green bar. If that market pulls back and creates a wick, that is considered a pullback, correction, retracement. Okay, the market pulled back. All right, good. So we have a down bar. From that down bar, the market pulled back and created a wick, because this wick was green first. Then it flipped and turned down red. Okay, so that first pullback after the morning opening, I grab my Fibonacci and I drag it in the direction of the bar pulling down. So if it's going down and does a pullback, I lock in. Where did that pullback begin? It did not pull back after this bar, it pulled back here. Okay? She pulls back and she starts going back in the direction of the downside. At that point, I'm making a decision. She did not come back to what? The golden ratio zone. Okay? Now, my years of experience, if she does not have the strength, the pullback bar, this bar right here, did not have the strength to pull back to the golden ratio zone, that is cueing me that this is a strong downtrend. Okay? So I am getting in. Okay? As soon as I start seeing any form of red, I'm getting into this trade. And I'm going to put my stop loss at the top of this wick. Okay? Now, since she did not make any effort to come back to the golden ratio zone, I am looking for TP1 and 2. So I enter this trade. As soon as I start seeing red, I enter here. Okay? I enter there. My stop loss goes 2 ticks above the high of that wick. High of this wick here, like so. Okay. Why am I getting that? Let me see. I think it's F2. There we go. And I am targeting, my first target is going to be negative 27.2. And my second target is going to be TP2, which is the 61.8 on the downside. And as you can see, Friday, we had a successful trade to TP2. Almost made TP3, but she found support. Okay? Now, here's the beautiful part about utilizing this tool. And I say tool and not strategy, because it's a tool. Your strategy is mastering market structure. That's your strategy. Okay? The tool to use to determine how strong a trend is the Fibonacci for myself. Okay? So, from this floor, we had an impulse up. Okay? And we had a full red bar pullback or retracement. At that moment, I go into my toolbox and I start at the low of this candle. And I drag the Fibonacci up to the top of that bar that started pulling back. Again, half hour later, we had the same scenario on the upside. The market did not come back to what? The golden ratio zone. She did not go to the golden ratio zone. As soon as I see a little green on this candle at 15 minutes later after 10 o'clock, she starts popping green. This is what we do. We hit the buy button right there. We put our stop loss 2 ticks below the low of the candle. Of course, she created a wick. Okay? Because she did not come back to the 50%, 61% area, I am looking for TP1, which was the negative 27.2. Okay? And I'm also having my runner run to TP2, which is the 61.8. Okay? 2 trades on Friday on the 5-minute chart for the ES market is a beautiful Friday. So I just wanted to do a market breakdown of how I use the Fibonacci tools, okay, and what levels are most important to me, and when to apply it, how to enter, where to put my stop loss in. Okay, this is Master B. Market recap of Friday. I am out. Peace.